Hey, what's going on, guys? Austin here. I hope everybody is doing well. Um, so, want to go over a few things. I know that, excuse me, I'm coughing real quick. Hold on. So, I want to go over a few things. Right now, my screen's completely blank. I've got all my indicators turned off just to keep it clean. So today, I want to go over my trade recap of SPY. That's the first thing I'm going to cover. Obviously, when I'm getting into a trade, um, I'm going to open up this right here. It's called Orb Algo. I'm going to open this up, and I am not going to make a trade until any time until after 8:30. Not 8:30. Sorry, this is on a different time zone for some freaking reason. Um, Hold on. I've got to fix this. Why is this messed up? Why is my? I don't live in New York. I think this is the right time. I think. Yeah. All right. Cool. All right. So market opens at 8:30. I'm not really going to do anything for the first probably hour, to be honest with you. I mean, just because this is just crazy. I mean, you can. Last thing I want to do is it market up. I mean, you can take a quick scalp there, but hop into this and then this thing just drops off, boom, and then all your profits gone. So I don't really trade for the first 15 minutes. I let this thing build real quick because it's a 15-minute algo, and really, if you want to see what it looks like at 15 minutes, hold on, Jesus, okay, here's today. Let me go to 1 day. But click on 15 minutes. That'd be cool. Oh, okay. It's being weird. Um, all right. So here's the first 15 minutes. So, first candle, it hit a high of, let's see, it hit a high of 685. So that was the high for today. 685, about 685-ish. All right. And then on this second candle right here, this is the 15-minute mark. It looks like it hit a low of 683. Well, those are two lines that I'm gonna go ahead and draw, right? I'm just gonna do a horizontal line. I'm gonna put one right here, and then I'm gonna put one right here. Okay. Reason I'm doing that, and let me get rid of these lines. Hold on. Boom. I'll tell you what these lines are in a second. So, reason why I'm drawing those lines is because those are going to act as either a support, some type of support, or some type of resistance. Um, you know, if you notice right here at open, where are we? Right here. See, this is what happens when I drew too many lines. Um, if you look right here at open, immediately it went down, right? Went down and it kept going down, right? But you see right here, let's take a look right here real quick. You see right here when it hit this red line, it stopped and it tested it, right? It tried to stop and go back up, but buyers were not strong enough on that one. And so then 15 minutes later, kept going down. All right. And then you see right here on this middle candle right here, see, it went up and it tested that bottom line again, that the bottom of that 15 minutes, the low of the 15 minutes, it tested it, didn't work. It went down. Well, this time it pushed itself through. But you see what happened pretty quick, right? So at 11:30 a.m., it went, and then you see it went right back below. And then right here, it tried to go back up, and then it went right into closing, and now it's trading below it. So that's one thing I like to keep on there, because I mean it's just an important factor. Another thing that I like to do. So I'm gonna go. Um, Day before, so yesterday's trading. So this was the 15-minute candle of yesterday. Well, You see this green line right here? Look what it's lining up with. Hold on. Is it going to place my thing? Look what it's lining up with. This isn't always true, but I mean, looks pretty true to me. Look, hit a bottom right here, bounced off. So that's something I like to do as well. Another thing is, so today, so this I would have drawn for this today, but going into tomorrow, I want to mark my highs, right? So this was my high right here, all right, and I want to mark my low. Well, my low is going to be about right here, right? Okay, and then I'm going to mark what has been a natural point of resistance today. So this right here, this point right here, this 684 was really a natural point of resistance. I mean, you saw how quick this went up here today, and then how far it came down. You saw how quick it pushed up late in the evening, right before market close, and then it pushed right down. So that's what I like to. Those are kind of some lines I like to put. And I'm going to keep these lines going into tomorrow's trading, right? And just see what happens. I don't know what's going to happen. I don't know if we're going to have a gap up or a gap down. I've got no idea. All right, let me get rid of this real quick. Well, actually, no, I'll keep that up there. All right, so going into my trade plan. So let me turn this on. All right, and let me go to the 3-minute. And I'm going to explain to you guys why I like using the 3-minute over the 1-minute or the 2-minute. So anyways, now we're at a closer look. We're looking at things a lot closer. So right here, we've got this. This is the 15-minute high, and this is the 15-minute low. All right. Well, 15-minute high, you can see we tried to go up right at 8:33 a.m. Green candle. 8:36 a.m. we tried to go up. What happened? We touched this, bounced right down. All right. And let me change the colors of these real quick. Give me a sec, because these are kind of messing me up a little bit. Let me just change it to a blue. We'll keep that one as a. We'll keep that one there. We're going to change this one to a blue, just because I don't want to get. It's too many red lines for me. I'm going to change these all to blue, so I'm not getting thrown off. And we'll keep that one down there. Now we're going to change that to a blue as well. All right. This one doesn't matter. We can get rid of this right now. All right. So anyways, as you can see right here, we tried to go up and get outside of this 15-minute high. You can see we bounced off. All right. And then right here, you see this candle right here, it closed right here on this blue line. What was this blue line? Well, for one, it was the high for the day. But let's scroll back a little bit. What else was it? Well, it was a support right here in the beginning. It was support for after hours trading yesterday. Oh, hold on. I don't want to change that. What did I do? There we go. Let's keep going. Let's see what else. It also is right here in between this gap up. Let's see. Is there anything else? Oh my God, I'm changing my freaking lines. And if I curse, I'm sorry. But I'm just gonna have to deal with it. Let's just keep scrolling. I just want to see if there's anything down here that this may be supported. I don't think so, but let me just do this. Hold on. Well, funny enough, this was also, let me go this way. You can see that this was also a resistance level for other candles back in late October. So you see resistance right there. You see resistance right here. All right. And then, you're getting a little bit of support right here. So this, this line has probably played a role in in the past, So anyways, let's go back to a 1 day. All right. So that's why I have that line there. But anyways, back to this. All right. Hold on. So anyways, you can see, is this the right day? Yeah. You can see that and I'm on the 1 minute chart right now, but you can see we clearly bounced off this top line, went down. We tried to retest. We tried to respect this line. We could not. Tanked down, right? And now you can see this is the 15-minute low. Okay, 15-minute low. So the when I say 15-minute low or 15-minute high, I'm purely referring to the first 15 minutes of market open. So for me, it would be 8:30 a.m. to 8:45 a.m. All right. So you can see this candle went down, right? And you can see it bounced off of this 15-minute low quite a couple times. 1, 2, 3. After the third time, it kind of went up, it shot. Oh, but look what happened here. This, what was once a support, now has become a resistance. See how many times we bounced off this? 1, 2, 3, 4, 5, 6, 7 times we bounced off of this blue line. All right. And now we shot back down. Well, right here, we bounced off of that 15-minute, went under. We tried to retest. We did. We got above it a little bit. Guess what? We started trading sideways right here. We did some nasty trading right here. All right. And then finally gave up a little bit, went down. And then trying to see, what is this line? I don't remember what this line is. I'm deleting this. This was the previous high or the previous low, pretty sure. Let me see. Yeah, it was the previous day. No, actually, I don't know what that line is. Huh. Sorry if I'm like kind of jumping around. I'm just trying to figure out what the fuck this is. Oh, I'm stupid. This was our bottom end. This was our low for the day. Not our low for the day, but this is where we started getting support kind of around 1 p.m. So anyways, you see we went down. So obviously we are in a pure downtrend, right? And the reason, obviously, all these candles, they're under the blue line. Let me switch to 3 minute. This is why I use 3 minute, because it shows me exactly everything I need to see. So obviously you can see we're clearly under the blue line for the most of the part of the day. Oh, that was yesterday. God, I'm a terrible video editor. Here we go. All right. Today is Wednesday. Yeah, the 12th. You can see we are clearly under the blue line for the most part of the day on the 3 minute. Okay. Yeah. I mean, there's not one time where we touch, right? And we go down, and then I think I executed my trade. Let me look on my phone real quick and see when I executed, when I told you guys to buy in. So let me go SPY. Let me see. It doesn't tell me when I bought in. Well, hold on. If I do it like this, SPY. All right, let me go on here. Let me see. Show more. All right, here we go. Buy SPY 685 call. So I bought this call for the first call I bought. It was for some contracts. I bought it at an average price of 35 cents, which is $35, and I filled that order at 10:29 a.m. So where are we at? So 10:29, about right here. Yeah, because reason being, I see that we have a strong candle right here. All right. And then I see we're trading sideways. And look, this is, somebody asked me about yesterday under my video to explain like candles, like what I'm looking at. How do I read candles? Okay. Well, here we go. see this long bottom, these long, the candles with the long wicks at the bottom? That tells me that sellers are getting exhausted, right? Sellers are getting exhausted. Buyers beat the sellers because that means that tells me that this candle was once as long as this wick, right? And sellers are trying to drive this price down, and they're driving it down all the way down here, and buyers pushed it back up. So buyers were winning. Buyers were in control there. Right here, this is kind of an indecisive candle to me. Right here, long candle. Okay, but then we get right here, and we get a red candle, sellers, that, and it has a long top wick, so that tells me, okay, sellers are getting control. So this is when it goes down. Oh, I'm getting my times mixed up. Sorry, right here, these, but they still have big bottom wicks, right? It pushes up. This one has a big bottom wick, pushes up, right? And then it gets above this SMA line right here, right? So now it's starting to trade sideways a little bit. Nobody can decide what they want to do. So you've got a big candle right here for buyers on the bottom, and then this one is switched to the green candle, and you see longer top wicks. So sellers are now kind of more in control. So what happens? It goes to a red candle, and then here you go. Here's another red candle. Look how it has a very long top wick but no bottom wick. That means it's getting pushed down. Look right here. Very long top wick and no bottom wick whatsoever. It got pushed down from 682 all the way to 681. All right. And then right here, this would have been the better entry. But I waited. But I got in a little early, but it's okay because I mean, I still made profit, and I hope some of you did as well. But after this candle closed right here, you see very big, very long bottom wick. And it also touched this line down here. This was the support. This is what created the support. So then it pushed it up, pushed it up. All right. We're pushing up. All right. We're touching this SMA line. All right. We're going down a bit. Now we're pushing up some more. Finally, we're above this SMA line. All right. So now and look, you can see they tried to drive it down. Look at this big wick right here. So anyways, goes up, goes up. We get a little bit of here. We get a little bit of up and down trading. Honestly, the market was kind of crap today. It was really slow. And then right here, this right here is where a lot of people should have sold. This is where if you're holding like one or two contracts, you should have hit sell all. If you're holding 50 contracts, you can either hit sell all or like maybe sell half. Because here's something you guys need to understand. When you're day trading SPY, you cannot possibly, and I mean possibly, hope for 100, 150, a 200% gain. That's just not really gonna happen. Can it happen? Yeah, of course it can happen. You can have some crazy catalyst that shoots it all the way up or shoots it all the way down. But guys, you've got to be okay with only getting 30 to 40% profit. Okay, because look, if you are only aiming for 100%, you're being greedy and you're gonna blow your account. You're going to miss out on great profits. Okay, tell me this. Would you rather, and 9 times out of 10, this is what's going to happen. Would you rather sell all of your calls or your puts for a 40% profit, or would you rather sell them for like, let's say it hits 40% profit, but then 20 minutes, 30 minutes goes by, and now you're only able to sell at 10% profit? Or the market tanks or goes the opposite of what you need, and now you're negative 50, 90%. See what I'm saying? So you can't hope for a Hail Mary. If it happens, great. But do not go into every day. Don't go into trading every day thinking, you know what, I'm going to hit 150% because you've already lost. The market has already beat you. All right. Because if you have a 0 DTE, let me rephrase that, a 0 DTE call or put after about, let's see what time it was. This was 12:42 p.m. Like after this time, volatility is getting higher and your time decay is eating you up. Not to mention, if you were in calls and you didn't sell after this, guess what happened? You went under. And because of the time of the day, you're now in the red, right? You're in the red. And now you're like a dog chasing its tail. You're trying to chase that profit, but you're not going to get it. There's no way you're going to get it. And then there's people right here. Oh man, you know what? I'm 80% in the red, but this right here, if this just goes up, then I'm going to break even. Why are we hoping to break even? We need to hope to make profit. So look, here's a little fun thing that you can do if it needs to help you. You need to stop looking for 100% profit, all right? Because you're not going to grow your account that way. You're going to blow your account, and you're going to continue to be let down, and you're going to think, "Oh my God, trading is a scam." It's not a scam. You just don't know when to sell. You don't know when to take profits. So, if you want to do something on your Robinhood page where it tells you your profit when you're on the stock, put a piece of black tape over the amount of money that you're profiting. Leave the percentage up where you can see it, but put a piece of tape over the number. And when it gets to a certain percentage, sell. And do that for 2 weeks straight. I bet you your account will be in the green. I bet you your account will be so much more profitable than it was 2 weeks before. But guys, you got to stop hoping for 150% profit because it's not likely to happen. It's really not. The only time it'll happen is if you buy swing calls or swing puts. And I mean, like, they're dated out all the way till like December or January, and you've just been collecting over time. That's the only way that you're going to collect 150% profit. And the reason you can do that is because you're not fighting time decay. When you're fighting time decay, you're fighting a losing battle. Okay? You're fighting a losing battle. So, anyways, market went down and it tried to retest this red line, couldn't do it, went down again. 2 o'clock, big institutions came into play, ton of volume. I think I saw on the 1 minute chart at one point, it was like, just on the 1 minute chart, like $300,000 in volume, or not 300,000, but like it's right up here. Look on my top left screen at the end. It's right here, right there. All right, so how much volume do we have here? We had a good bit going down, but look, like we have a decent bit of volume. Look how much volume we had in these: 224, 291, 269, 291, 313, almost 500,000, and then 637,000, 540, 405, 442. We just had so much volume right here. But let's say if you caught this scalp right here, a good indication that you should have gotten out. There's a couple actually. So the first one that I noticed is this candle right here, right? When this candle formed, this tells me, oh, this is going. I know exactly where this is going, and it did this chart. It did this candle next. If you see a very big green candle like this, and then you see this, I don't know what they call it. I think it's called like the North Star or something. I don't know. I don't use the slang term for it, but yeah, when I saw this, I knew it was going down. And also, look where it is in the Bollinger Bands. Look how far it's out. It's destined to go down. So that's that. So yeah, did pretty good in profits today. But yeah, guys, look, you got to start small to get big, right? You can't don't go and do some crazy you got $1,000 account and you've got $500 in calls or $500 in puts. And if you're gonna do that, at least be open minded and be okay with losing that money. You should never put an amount of money that you're not okay with losing. And if you're just not okay with losing money, then you need to do something else. This isn't for you. All right. I'm going to go through some questions now. Sorry if that was like a long little intro thing. Let me go through some of the questions. I'm literally on the app right now, and I'm about to go through some questions. All right. First one is from Jerry Vegas. He said, can you talk about why? Okay, so real quick. Actually, I'll read it and then I'll get to it. Can you talk about why you chose the 685 call and not the 686, which was a lot cheaper? And why you decided to exit the trade at 684, though I'm guessing that this was because the bands got tighter. So why did I choose 685 call instead of a 686? You would think they're $1 apart. It's not that big of a deal. Look, the reason that 0 DTE options get cheaper the higher the price goes is because, let's say for instance, give me a second. So let's say for instance that you are, let's say for instance, this is tomorrow. So this is tomorrow. These are going to be 0 DTE, right? So price is 684 right now. Is that right? Probably. All right. Anyways, 684. Well, if I'm going to choose a call option tomorrow, 9 times out of 10, I'm probably going to choose this 688 right here. Yep. And the reason I'm going to do that is because it's not going to be uncommon for it to go from 684 to 688. And look, I understand this is only 38 cents and this one's 24. It's a 14-cent difference. But I've got 14 more cents to play with than you do if you choose this one, right? Because you got to think, as time decay goes, you lose profit. When you lose profit, that goes from 0.24 to 0.23. And eventually, as you get lower, the spread from let's just say 10 cents to 9 cents is a lot wider. You've got to cover a lot more ground to get what you lost, right? So that's why the cheaper you go, the faster they decay. And the faster they lose money fast. Now, don't get me wrong, the 688 is still going to lose money fast, but I've got a little bit of a buffer. You know what I mean? And also, something to also note, I think it went down to, let me look. Let me remember what hold on. Let me see what the trade was for, let me see what the stock price of SPY was when I went. Oh, wow, guys. It shot up. That must have passed something. It's up 10% overnight. That's crazy. If only I could have done that during the day. Let me see. So let me see. Buy SPY call. Because I bought 3 different times. Let me see. Here we go. No, actually, I bought 4 different times. Jesus Christ, Austin. So hopefully you guys can hear me. I don't know why my microphone just turned off on its own. What was SPY at? I don't know what SPY was at particularly when I bought it. Oh, actually, yeah, I do. What am I doing? I bought it. What time did I buy? I bought at 10:29 a.m. So I bought right around here. Yeah, give or take. Right. Yeah, right here in between these two candles. All right, and I paid an average 35 cents a price, right? And I think Jerry was that his name? Yeah, Jerry said he paid 0.2. He paid 21 cents. So he paid $21 a contract. Well, anyways, these contracts are starting to look good. It's going up, but then looks what happens. Boom! It tanks down. It goes way down. Well, anyways, there was a point where I DCA'd, so I dollar cost averaged. I bought some more calls to cover my average. And let's see, I bought a couple contracts at 1045. So literally right here at the bottom of this candle, I bought some contracts there and I paid an average 31 cents. So 31 from my 35, right? I'm trying to get my average down. And then let's see, I bought some more at, let's see, 1049. So honestly, right here, I bought some more because it went way down here. It was down here when I saw it. I was like, damn, I think I'm going to buy some more and my average was 21 cents. So, or no, 22. So $22 per contracts. And then the last buy I bought was, give me a second, at 1057. So where is that? 1057 right here. I bought it right here at the bottom. My average cost was 16 cents, so $16. And that was the last time I DCA'd. Oh no, sorry. No. Average cost was 28 cents, so $28. Right? And anyways, when I sold my contracts, let me tell you what I sold them for. Hold on. My average cost for my contracts came down to 20. I want to say 28 cents. So $28 was my average cost per contract after I DCA'd and all that stuff. And I sold all my contracts at the top for an average of 49 cents. So $49 a contract. So I pretty much doubled doubled what I spent. And I sold them right here. Literally right there. I was like, nope, I'm done. I think I left like one or two runners and they ended up closing out worthless, but I don't care. But so that's why, because the higher the contract, give me a second. The higher the contract price, the safer you are. Now you can go freaking throw a, you can go buy one of these if you want, and it's only going to cost you $6. Yeah, it's cheap, but it's also hard to move. Like it's impossible to move. Like if I were to do this, just take a look. It's impossible to move, guys. Like y right here, look, and this is also showing expected profit loss. This is it's impossible to move. You'd have to get to 392 to break even. And this is SPY at expiration. These are 0 DTE. Like you have to make up a lot of ground just to break even. Now, that's not saying you can't make, that's not saying you can't make profit, going up, all up here. But it's just you're not gonna you're living on a dream. It's a lottery play. It's literally what it is. It's a lottery play. I play these sometimes on my big account. This is my small account. This is my 3,000 to 30,000. And I don't want y'all to think that I only have $3.74. All right. This is a cash account, so I can't get my shit till tomorrow. But and obviously you see I spent all my buying power today, which I don't care because I'm up over 3,000 right now. But anyways, point of the story is you want to be within, within like at least three to $4 of where the price is to give it a chance. And another thing, you want to know why I did 665 instead of 666? Because let's go back to right here, my 15-minute high. Look at this. 685, 684. We already hit it. Why can't we do it again? You know what I mean? And we hit 684 right here. I was $1 away. $1 away. So that's why I try to choose a contract that's within reason. One, it's safer. Two, it's most likely to be profitable. The further you go out, the harder it's going to be successful. Now, you can go further out, but it better not be a 0 DTE, or you're nine times out of 10, you're either going to lose money or you're going to make some profit, but you're not going to make a lot. The only way you're going to make a lot of profit on a 0 DTE with a outside the money contract is if there's a catalyst, like for instance, Jerome Powell comes and speaks, or Trump tweets, or something like that, or the government opens back up, whatever. But yeah, no, I want to stay as close to the price as possible. I don't want to be right on top of it because I don't want to pay that much for a contract. I want to be able to get a good couple of contracts, but I don't want to, if I'm, unless I'm on my really big account, on the small account, which I'm assuming, and I'm not trying to generalize, but if you're on a small account, more contracts doesn't necessarily mean you're going to make more profit. I mean, yeah, it could, again, if there's a random catalyst, but it's better, especially in the beginning stages, until you can build your account. Play it safe. All right, we're making a long video. I need to get through this. I don't want to keep you guys too long. And why did I get out at 684, Jerry? Because I knew that we were the market was gunning for 685, and it just took it so long to get to that level. And the way that the candle moved, the way it just shot up and it stalled, I was like, yeah, I'm out of this. I'm getting out of this because this is not going to last. It could have, but I'd rather stop with profits than stop with losses. um no, I'd rather stop with profits than keep going with losses. um Let's see. Oh, you also asked if I do DEX or GEX, Jerry. No, I do not. Um, let's see, Chandra. So Chandra said, I looked into the video. It's very interesting setup. I like the setup. The explanation was spot on. Here's some observations that needs clarification. What is considered as narrow BBB? Oh, so a narrow Bollinger Band. Okay. This right here. See how it's so tight right here? Like there's not even enough room to really move. That is what I consider narrow right there. Now I know that's an after hours trading or pre-market, but that's what I consider narrow. Let me see if I can find something else. Um, yeah, you don't get a lot of it during regular trading, but you can. Let's see if we can find something. Right here. Look how narrow this is. This is just chop. This is just choppy right here. Um, right here, choppy. Look how narrow it is. See how this is wide, nice and wide. This isn't. This is very choppy. So that's what I consider narrow. How wide the BB is considered ideal setup for a day? Really like this. I mean, look, if you're if your candles are hugging one side, then it's gonna be wide. But if you nonstop just see them, and let me go to, I don't like to do the 1 minute because the 1 minute skews everything. Look, I'll show you. See, the 1 minute makes it seem like it's doing something fantastic, but it's not. You can't trade this. You can't trade this right here. There's nothing tradable in this at all. And this is on the 1 minute. Okay, this if it's just going back and forth on this blue line, that's what I consider narrow. All right, you could trade like this real quick, boom, but and you could scalp these maybe, but you can't really trade this stuff, This is a good trade right here. It's right here, boom, 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 you know. Um, God, that's awful. There's no volume there. So yeah, that's what I consider narrow. But then also this is too wide. Look how much look at this big bubble. There's no direction here. Let's go to the beginning, early stage. I mean, this is pretty wide as well. I mean, look how far these are too wide. Obviously you can see a clear direction, but still it's going up, down, up, down. I mean, it's just got no clear direction. All right. Do you avoid the tray if the PA is hovering? Yeah, I do. Yeah. Yeah, I do. Now, if I'm already in the trade, just because it goes near the blue line doesn't mean I'm going to hop out of it. Like right here. Yeah, like right here. I got in. Let's say like right. I think I got in like right here. And obviously it goes up and it comes down and you see it bounces right off that blue line. But no, yeah, if I'm in the trade, obviously I'm not going to hop out if it goes towards the blue line. But if I see but I'm not going to hop in it if I see it hanging around the blue line. If the candle hugging the green or red line, then what do you take the trade? When do I take the trade? I'm in ideal entry. Do you wait for pullback for ideal entry? So yeah, it's good to wait for a pullback and a retest. I obviously did not when I took this trade. Where did I take it? So I took it right here. I got a little. I got a little. No wait, where did I take it? Oh, I took it right. Where did I take this damn trade at? Hold on. I think I took it like right here. All right. I don't know. Yeah, you necessarily you want to wait on a retest. Oh, I'm on the wrong day. God, I'm stupid. I'm so sorry. This is why we're wasting time. I took the trade right here, and then it shot up, and then obviously you see it retested. I could have gotten screwed and it could have gone down, but luckily it came right back up. So yeah, you kind of want to wait for a retest, but just do it at your own risk. All right, next thing. Can you let us know a little bit of how you got started in day trading? What was your education? Did you start? This is from Rai Jowins. What was your education? Did you start finance? What are some books or the resources that will help us beginners with understanding the whys and hows? Um, so what got me started in day trading? The honest answer, I'm an adrenaline junkie. That's the honest answer. I thrive on pressure. I perform pretty well under pressure. So that's why I got into day trading or trading in general. And what was my education? I didn't really have an education, man. I dropped out of college. I wasn't a very book smart person. I was more of a street smart kind of guy. But I mean, my dad, he is a stockbroker. He's been one for 30 years, financial advisor. So I learned some things from him, but I've learned more just doing it, man. Just doing it. Um, you learn as you go. Some resource books. I don't really read a lot of books. Might make me sound stupid. I don't know. I read the news though. I'm subscribed to the Wall Street Journal. I'm subscribed to Bloomberg, and Twitter as well. Twitter's a great resource, but just don't like overdo it because you can see so many different opinions. You need to make your own opinions, your own evaluations. Um, but yeah, man, really just doing it, just doing it, learning, reading things reading, watching Anessa's videos. He has onboarding videos on the app. They're great. They're fantastic. Um, but that, and then going back and looking at your trades like I'm doing right here, seeing what happened, seeing where I could have entered better, looking at the different candles, so just look up things. Whatever you don't know, look up, hey, how do I do this? And watch YouTube videos. YouTube videos are fucking great. Um, um, and yeah, can you start a tutorial series on day trading for beginners? Maybe. I mean, this is kind of what that is. I don't really know if I want to do a whole series though. Let me see. Hey, brother, my question is more of which indicators you use. I get the 9 EMA, but I know some use the 9 on the 10, some on the 15, and I have even heard the 9/20 strategy. So just trying to see what you use and what helps you with your entire entries, exits. Also, you always seem a lot further out of the money on your call, so just some better clarification on why the aggressive targets. It's funny. I was literally just talking about not doing that. I get bored. In all honesty, out of the monies. And honestly, I probably shouldn't post those to you guys because it can be very misleading. But I do out of the money just because I get bored sometimes, and sometimes it's a lottery. Sometimes I just want to see, or sometimes I'm seeing good price action. Sometimes it's seeming very bullish, and it's possible. But I've switched my strategy where I'm doing closer to the money nowadays, so you don't have to worry about that. Let me see. Spade, would you say? Spade, did you ever tell me something? Hold on. How are you finding? Oh no. Okay. So if I was to summarize your strategy, I'd be waiting for the price to hug a side, wait for it to cross SMA, wait for the RSI around 40, show a shift in momentum, and you hop in. Not sure if I'm misunderstanding here. I'm also confused on how exactly you identified that there's a shift in momentum. Yeah. So something to do when you get in. So a good rule of thumb, obviously, is not to trade the um, first couple of minutes of market open. But you can go to the bigger candles. So you want to get a bigger outlook. So hold on. Boop, boop, boop. So hold on. Let me widen out these candles a little bit. So wait, that's not what I want. Sorry, I don't want the 4 hour. I want the 1 hour. All right. So given the market outlook, well, obviously within the first hour, I can see a fat red candle right there. So I'm assuming it's still going to go down. And then right here, I've got a candle that is, and the red part of the candle right there in the middle, it's perfectly in the middle of the two wicks, right? So that tells me that, and it also bounced off this line right here. So that tells me, all right, well, it's probably going to reverse now. And what did it do? It reversed. But then we get to the top right here. So I don't look at the 1 hour chart throughout the whole day. I really just use it for like the beginning of the day. And then another thing you can do for like kind of feeling on direction, let's just say go to a 15-minute chart, right? Well, you can kind of feel direction right there, can't you? I mean, it's nothing but red right there. So that's how I look at where direction's going. And also, it's also about like marking your levels as well, how I know when it's going to shift momentum, and watching for confirmations, because obviously you can see this is a key level right here. It bounced off this and it bounced off it right here as well. So that's how I'm watching momentum, and I'm just learning where key levels are. Okay, where are the previous lows? Where are the previous highs? Where were some resistance and support throughout the day? Well, here's a resistance right here, right? That was previously a support. What else? We got another right here. Here's a support. You need to see right here. It's a support. Boom, boom, boom. That was a support right here, and then it previously became a resistance, and so on and so forth. So that's how I can kind of tell with momentum, and also it's kind of like you just kind of understand after a while. You just get a feel for it. Um, and to answer your question, if I look at all of those things at the same time, yes and no. I do, but sometimes I just kind of get a sense for it. Because like, hold on, oh God, hold on, that's a little bit too much. Tighten this up a little bit. Oh, Jesus, this is sensitive. All right, because I got in like right here, right? RSI was what? 45? Nah, it's like 52. It was growing. So, yeah, I just looked at that, and that's really it. But let me see if there's any more questions. Um, yeah, that's all I got. I don't see any more questions. Market outlook. Look, man, I don't know. We're really struggling to get up there to that, that 685, that 690 range. We did it once, but we're really struggling to get there, and we've been going down a lot. And I think, don't want to fear monger, but I think there's a potential for us that we could dip down even lower, um, because I feel like I don't want to call it an AI bubble, but I feel like a lot of these stocks are getting to a very high price, and when things start getting overpriced, you don't get a lot of volume. You can't get a lot of retail buyers, because a lot of people can't afford them. So I think there's going to be a correction. I don't know how much. And also other factors that I think are hurting us right now is, you got all this politics aside, you got all this shit with Trump. I think something just came out today about the Epstein stuff. Um, you've got the government shutdown. You've got tariffs. You've got Michael Burry coming out of the scenes. Earnings. Look at what's happened with earnings. A lot of people played Oklo yesterday. Everybody was playing puts on it. I mean, everybody, not even just the people here. I mean, majority of the way that it was going, like everybody was saying it was going, was down under 100, like 98, 93. And what did it do? It went up to like 106, 113. So, yeah, I don't know. The market is really weird right now. Trying to predict it, you got a better chance of taking 10 grand and going and throwing it on, red or black on the roulette table, you know. So be patient. Um, don't chase don't chase a trade, and don't FOMO a trade, because guess what? The stock market is open 5 days a week from 8:30 a.m. to 3 p.m. You can trade every day, but sometimes sometimes not trading is the best thing to do. If you don't know what you want to do, then don't do it. All right, but don't hop into something just because everybody else is. You don't know everybody else's situation. You hop into something and you got $1,000. Well, guess what? I just hopped into it and I've got 50,000 that I can spend on it. So um, I can take a loss. You can't. But yeah, guys, you got to be willing to set stop losses, and you got to be willing to take profit when you can. I'm not saying take a 10% profit or a 15 or a 20, but once you start getting up there 30, 40, 50, take a fucking profit. The only time you're really going to see 100% or higher profit is one, if a catalyst happens while you're trading, or 2, it's a swing trade, or 3, you got lucky with an earnings play. Okay? I'll leave you guys with a story. I was back in early October. I was in the middle of trading. I can't remember. I think it was AMD. Yeah, I was. I think I was trading AMD or Nvidia or something, and I was just doing a day trade. Like we did today with SPY, and I was doing very well. I was doing very well. I was up like 30% on profits. My trade was going well. It was developing very well. And then out of nowhere, it just tanks. I mean, it dropped like over 100%, over 100%. And that's because Trump tweeted about the China tariffs. And over the course of that week, I lost $50,000. Now, did it hurt? Yeah, it didn't feel good, but did it blow my account? No, I still had 500,000 more to play with. But that's what I'm saying. I was able to take that hit. Did I want to take it? Of course I didn't want to lose $50,000. But I was able to do that. Now, if you only have 1,000, 2,000, 3,000, 4,000, even $5,000, and something like that happens, are you going to be able to like withstand that? So that's why I'm saying take profits when you can take profits. Don't over leverage yourself. All right, guys, it's good talking to you. Sorry for the long video. I just wanted to try and be as informative as possible. Leave a like, leave a review, whatever you want to do. Leave comments if you got any questions. Leave comments if I did a bad job. Leave comments if I did a good job. Let me know in the app. If you guys have any other questions or anything. But yeah, this is my main strategy that I'm messing with right now. Yeah, this is my main strategy. Something else I also throw up just to show you guys. Supply and demand. So supply and demand, like I covered yesterday in the video I sent, these are going to be pretty key sections, So, you see your trades start to get in these supply bubbles. Well, you can also kind of tell, all right, well, cool. So there's going to be a lot of buying happening right here. So what happens when there's a lot of buying? The price goes up. All right. Well, we never really got to this supply level, but there's probably a mini one within it. Let me see. See if it reloads. Yep. See right here, little mini supply or demand zone. I can't remember what the top one's called, but you see right here, it hit it, boom, went down. So that's another way how I knew how to sell. So yeah, guys, 52-minute long video. Hope you guys are well. Yeah, if you got any questions, let me know. Peace out.